It's 12 o'clock. It's taking stock. Let's rock. I thought I'd add that little bit to it, John. Any good? It's trying to make stocks issues a bit more rock and roll, you know?
Good luck.
So, anyway, had a good week in the markets, John, or not?
Up and down. It was a good day yesterday. I don't know why. It was a bit of a tough week. The H&T was not a great update, but then yesterday, a lot of my stocks were up. I don't know why. Focusrite had a big jump. For example, HViva had a big jump.
Nice.
But then 10 Lifestyle had a big fall. So, who knows? There's no news on that one. It's, up and down. Up and down.
Well, let's just see what the markets are looking like. Here we go. This is the London Stock Exchange live. And we got, look at the green screen. It's all good as well. Do you know what? Oddly, that's a flip of what's happened in the last few days. Oddly, generally, the AIM all-share has been, when everything's been falling, it's falling less. It is rising a tad, 0.15%, but it's not the best performer. It's the worst performer, but it's all green on the screen. FTSE 100 up 1.22%. That's a big move.
Those top three, Croda, Diageo, Burberry, have all had a pretty tough time recently.
Yeah, you say James's Place as well.
And James's Place, absolutely. Yeah, absolutely.
And some of the fallers here, but Sainsbury's down, Tesco, all the consumer staples there.
Well, they've all been very strong, haven't they?
Yeah. And, there we are. Maybe we're seeing a change, cyclicality here. BAE Systems, phenomenal performer. And to be honest, I can't see the world getting any, less offensive as far as military and wars going on. It's going to get worse. So they're going to be in work for a long time, those guys. Marks & Spencer's down. They've had a good year. In fact, look at that. All the good performers here. Rolls-Royce. It's a flipping sentiment here, isn't it? Risk on for those, but 1.22%, FTSE 250 up to a fifth of 1%. But yeah, let's have a look. In fact, talking about that, there is in fact, someone just commented there. By all means, join in the comments. That's why we're live. You can join in, hit that thumbs up button if you could. Subscribe to the channel, importantly, and download the Vox Markets app, voxmarkets.co.uk. So, Riffis off. A regular commentator, thank you very much, fella. They said, I'm not a massive fan of Motley Fool, but when they say winners keep on winning, I think it's generally true. Stock performance is different. Momentum is real, but doesn't last as long. Yeah, but what you need to see is literally, the momentum backed up by fundamentals. And that's what we're looking at today a little bit. And I use a sort of a little bit of a picture here, but do performers keep performing? And I was going to call it "Can winners keep winning," but I thought let's do something else because these companies here, John's on a screen here on companies hitting their 52-week highs, and because we did look at last week at lows, wasn't it? And I tend to think if you're looking at lows, it's fine, but your time frame's got to be longer. You just spend lots more time monitoring them before you buy them. Whereas highs, I think if they're on a roll and they've come off a low and they're hitting 52-week highs, and their valuation's still good, then they're good to go. It's saying. But what stood out? I mean, look at some of these winners here. Fort Imprint, for example, John. That's been an excellent performer over the years, isn't it?
Yeah. See, it has good numbers recently, and it had sort of come off a little bit. But this is do winners keep on winning? Fort Imprint is a very good example of a company that very much has kept on winning. That chart has been up and up and up and up and up for years.
Let's look at this. In fact, you know what? Before I go to that chart, this is the AIM all share. Look at that. It's broke 200-day moving average there, come back, a little consolidation, but it's been a big rise from the lows of 26th of October. And now it's edging towards that 200-day moving average. And I did say yesterday, actually, if it can continue pulling up there, you may see this 50-day moving average cross that 200-day moving average, because that's coming down a bit, that's going up. That's a golden cross. That hasn't happened for years and years. And in fact, look at the last time the AIM all share broke the 200-day moving average, it came back down, it couldn't break it again. That was a downtrend, resumed downtrend. Now it's looking tantalizingly close to breaking that 200-day moving. Where are we? It's 749. 200-day moving is 750. 1 point in it, John. 1 point.
Yeah,
that's all it is. Anyway, so yeah, Fort Imprint. What is it? Fort Imprint. There we are. Look at this for a chart. Oh, that's not so good. But scrolling back, and look at that.
Yeah, that's what I mean. It's you've had blips and they're obvious blips. One of them being the pandemic, and one being the difficulties we've had this year, and general softening in sentiment. But that is a solid performer, solid and steady for a long time.
Yeah, yeah, absolutely. Let's see the 50-day off there. Yeah, absolutely. Look at that. Anytime pretty much just broken down into 200 move average and broken back up. Be
Yeah,
worth buying on the break back up because look at that. Broke up there after the cash crash. COVID dash for cash crash. It broke up a little bit of a flirtation down again. Or
yeah.
maybe cut it there. But yeah, but generally going
Well,
back has been very good.
I
Yeah.
think the other thing that shows you is that whilst you have these moments where what are very solid and proven to be solid companies have these periods where the share price does weaken.
Yeah, and there's an opportunity there, isn't there?
Well, I would say not in all cases, but in some it's an opportunity. But there is always the tendency to say, well, the momentum's over and it's finished, and people will dump a share at this
Yeah,
point.
yeah.
As I say, that's an opportunity, and it always, goes back to that idea to stay in the market. If you've got a good company and you bought in at a good price, and the momentum is behind it, over the longer term, then just stay put.
Yeah.
Another example in that list is Cranswick. A company I've followed for a very, very long
Cranswick, yeah.
time. But
CWK. All right.
basically, it's a pork producer. It said it began life as a pork producer. I think it's expanded a little bit into some other meat production. But you've had these periods where the share price is weakened, but look at that long term performance
Yeah. Well, let's
is
put a
very,
weekly
very
chart.
solid.
Let's have a look. Yeah. You'd think, wow, look at that.
Yeah.
That's from 1999, and it started life at £1.20 a share. Now 40 quid a share. That's
Yeah.
a goodie, isn't it? Do you know what? I went back last night. I'm a bit of an anorak, right? Last night when everyone got to bed, I was up. I was thinking, oh, let's have a look at a modern day winner. And I think we've sort of done this before. And I looked at what's it called, Warpaint,
Mm.
and I went back. I went back to look at read the results, and of course, during lockdown, they're in a bit of trouble here. But they were like sub
Right,
100
so
million market cap, and I always say, I want to catch something that's can scale. And generally, and in fact, if you look at some of the best performers recently, U Group and all that stuff, they're also sub 100 million. You go down too small though, and they can't really scale. But what's consistent was essentially the top line started going up by over 20%, and then that started translating into, and the margins didn't really weaken. But they did have obviously a massive sell off in the COVID dash for
but
cash
then
crash.
but then what didn't?
Yeah.
I mean,
But look at
some
that. Look at
companies
that.
didn't, but a lot of companies did. And
Yeah. But look at this. Even then, though, right, they rose very strongly in 2021, come back, and I couldn't see the reason why. Literally,
you started
it's
to
almost
have.
just sell off, just a sell off it was.
Yeah, I mean, 22, you really were starting to see some times that inflation was going to be problematic, and companies that were reliant on supply chains and input costs, and
Yeah, yeah, yeah.
there was a sort of souring in sentiment towards them. But again, you look at the long term story. That wasn't a time to bail; it was a time to buy more.
Yeah. Well,
Um,
it was literally it was 80. I think done at 120. It was shares an issue. It was about 84 million market cap there.
yeah,
Yeah,
yeah.
and it started sort of improving. And so even that, look, even that, if it's a company you'd keep an eye on, just breaking that 200 move average, new highs, and it didn't come back.
Yeah,
So
yeah. I
but
mean, these are
anyways, go on.
one thing I'd say about the confidence to hang on when things look tough, and this requires
Mm.
a different kind of research. Than simply looking at sort of
Yeah,
headline
yeah.
growth figures, headline margin figures. What is the strategy? How are
Well,
management going to deliver it? Who are management, and what makes them the people that are going to be capable of building these companies into the things that we see today?
yeah.
And to potentially keep building them. As one wonders whether Warpaint's story is over. I suggest it possibly far from is, but you have to go and do a different kind of research for that, more qualitative than quantitative.
Yeah, yeah. But also when you get not sort of sector specific, but like I said, the supply chain thing, was not specific to them. It wasn't their problem. When you got a company specific problem, then and it starts to drop the share price, then you may have to think, okay,
That's
it's
true.
not going right. But when it's a global issue, you think, well, they'll recover from this.
Well,
Then a
you
weakness in the share price, can help. It can be an
yeah,
opportunity, can't it?
absolutely. But then when things, macro events do conspire to hit a number of companies, and you may think that so the wheat is being chucked out with the chaff. as perhaps in the case of Warpaint it was. But it's also a time when companies are put to the test, and management are put to the test. Have they built in the resilience to get through these tough periods? What have they got that will, the people are missing that will take them through the other side? Companies, at these times of extreme economic stress, that is a time when bad companies disappear.
Yeah.
So what's the difference between a bad company that can survive a tough macro time and a good one and a bad one that won't? And that's where I say go back to the quality of research, go to the idea of moat, and really the sort of efficiency behind a company.
Yeah. And in fact, like I said, these tough times, they're good for good companies. They really are, because it
Well, they get stronger.
any sort of little bit of competition they had from companies that are not that good gets removed, and they take more market share, and you tend to find companies, of course, become more efficient in downturns.
Yeah.
And when the upturn happens, then they're really, obviously, the cash generation improves everything.
Yeah, well, I was
Okay.
speaking just on that note, I was speaking to the manager of an investment company called the Edinburgh Investment Trust this week, and they follow a number of thematic approaches, but one of them is Darwinism. The stronger companies will get stronger. Winners keep on winning. So,
yeah,
and actually another thing they have is supply chain resilience. Those two things are not unrelated.
yeah. So company I hold some shares in, Time Finance came up with some news yesterday, and they're trying to break that. I think they'll still go sideways a little bit, but they are trying to break the top end. What I quite liked of this, I watched a webinar with them, and they're doing own book lending, but they're quite conservative. They won't take on too much risk, and that's growing very well. And that has a compounding effect, because of course you get the interest off that and the asset-backed lending, and so it'll drop through to profit before tax, and you'll see this increasing margin. You get the improving profit before tax. I thought, I like that. So in fact, it doesn't matter if top line growth will be sort of 15-20%, but profit before tax will get better, because that's compounding effect of of own book lending, which is very good. So I quite like that. And I mean, they've been a decent performer. Like I said, they're on this list here. I mean, they're still. And in fact, if you look at so what have you got here? EBITDA change.
Okay, so basically, So we wanted companies that are set to grow their profits, that have grown their profits. That's EBITDA change, and our forecast to grow their profits as well. So we want a year of positive earnings, profits growth, and we want a year ahead of forecast profit growth as well. And we want them to be minimally geared. So to have a strong balance sheet.
And in fact,
if it's zero, there's net cash. And 25% was my max. Yeah.
You see that if you look down there, look at forecast EBITDA change. I mean, is 4 imprints above 20%. Cairn Homes is 40%.
Yeah, above 20%. My pick of the house builders.
Yeah, smart metering. I know you should have got into that, John. I remember you talking about that with
Paul
about 2 years back. No, but it was about a year back. About a year back, when everyone was doomsaying about the houses, and you talk about Cairn, I thought, I watched that interview with you and Paul, and I thought, you get into Cairn, but Time Finance is 39%. I think it's third on the list. So Informa forecast change in EBITDA. So you can see that going forward is a very positive thing. So earnings going to grow there, which is quite nice.
Yeah, I'll tell you another really interesting one. That's I'm basically just sort of looking at this list. It's a mix of, it's only 1 year highs. So these are companies that could just have gone to higher highs from over a very, very long-term performance, or they're companies that could have had a very tough time, and we've seen significant improvement in the past year. But another very long-term strong form is Auto Trader. You look down that list, and this is astonishing.
Well, it's almost a monopoly, isn't it? I mean, there are competitors on the market, but nothing. It's like the right move, the portal.
It's exactly what it is. So you call it, it's a platform effect. But this is a very good example of just the continual improvement of the products, of the services that they offer to the industry, to make themselves absolutely indispensable to the motor trade. And that's exactly what Rightmove has done for the estate agency business.
My father owned car sales, and he said they're not cheap, but you've got to be on them. You've got to be on Auto Trader. It's like being, it's like almost SEO pretty much. It's got to be up there. And if you want to find a car, someone looking for a car, it'll come up in Auto Trader. You've got to. It's worth the spend.
But I'll tell you what's astonishing, because we actually had some numbers out today from a car
And
Well, I say
Motorpoint, yeah,
retailer, Motorpoint. They're more on the sort of more on the auction side of things, but those numbers were terrible.
yeah, yeah,
And behind the problems are massive drop in used car prices
yeah.
over the
Well,
course of the past
Motorpoint,
9 months.
they have car sales, don't they? They're not auctions, are they? Are they
I
auctions?
think I think they run some auctions. I think
Oh,
they
okay.
run what was that thing? We buy any cars? Is that theirs? They sort of getting their stock in.
Okay. But do
But
they own that? Do they own We Buy Any Car, do
I
they?
think they do. Yeah, I might
Oh.
be wrong. It's correct me if I'm wrong. Pretty sure that's what they own that.
Yeah, I did. I said recently. I've run the spreadsheet on these, and they've had the broker note, and in fact, even though it's come off a lot, and I sort of agree with the broker, and they're saying I think it needs to be cheaper, because it's not
But
going
that's
to
the
recover for a
point.
while. And I think down here maybe some. And in fact, I put a sort of what's that? Not £1, but I put an alert here, so I think it needs to revisit these lows. But oddly, it came out today, went down, and someone's buying it up.
Well, I
Someone's
mean, the
buying it.
thing is, I mean, I get, going back to, let's say this interview I did with Jamie Constable at Singer the other day, there are certain sectors where the sentiment is so poor that, there's not a lot more bad news that you can chuck at them that's going to move the share price.
Yeah. Well, I'd say
Um,
that though. I just think they do say here, um, profitability for 2024 is now likely to be 5-6 million below expectations,
yeah,
even with anticipated
massive
strong
downgrade.
Q4. However, the board believes that the corrective costs and efficiency actions taken in full year. The thing is, this is
But
why
people
I
were
think this is,
expecting a downgrade.
yeah,
People were
yeah.
expecting a downgrade.
Yeah,
So, that.
headwinds will ease, they're saying, in 2025, and should well placed to deliver improved financial. But I do think, like cyclically, this is one of the stocks again, putting on your watch list. When interest aren't really coming down, you start seeing people go and buy. In fact, there's a very interesting thing on consumer confidence. Confidence today. We'll look at that in a bit. But consumers are getting more confident because they've seen. They think when we were surrounded by headlines of 11.1% inflation, people just thought it was going to the sky. And now it's come down a bit. It's just the anxiety, I think, around that reporting constantly about inflation. And people feel a bit more confident now because it's not, we've sort of hit peak inflation pretty much. And so, people's a bit more confident about spending. So I think once you get interest rates coming down, then this,
Mm,
and like I said,
mm.
they are working on their costs. So again, as we discussed just then, they'll become more efficient going forward. And obviously, interest rates won't come back to sort of zero, but at least they'll be a lot more efficient when they come back, say, to that 2-3% or whatever, you know.
Yeah. It's a tough one to do. But I guess the point that I was making or trying to make was that
Mm.
even though this industry is a tough one,
Yeah.
and even though the housing market has been pretty tough, then your likes of Auto Trader and Rightmove, the platforms have been very strong.
Yeah,
I think I
absolutely.
might be wrong about We Buy Any Car,
Yeah,
but I
okay.
can't.
Never mind, never mind. I'll make mistakes. Victor there has managed to get a picture of you or doing a hobby on the weekend, John.
Yeah, that's it. That's me. That's me at the weekend. You saw my coat the other day.
No, that's the full kit. We didn't see John in, but so Avon Protection, they report strong. What are they? The technology companies, respiratory protection equipment for military. That's maybe worth looking at. Like I said,
Mm.
these areas where are not going to get any weaker. Over the thing. So that's interesting because they come down a long way.
Oh
In
yeah,
fact,
we're in. I mean,
you
it's
mentioned
a
these before, didn't you?
catastrophic acquisition.
Yeah, yeah.
Yes.
So what happened? You mentioned it before. I forgot what it was about.
They bought. I think it was helmets. It was a
What's the
company that made
market for?
helmets, and it turned there was a problem with a product, a really bad product issue, and
Oh, yeah, didn't stop bullets in it or
massive
something.
write something like that,
Yeah,
massive write-offs. But you would have thought this company is in it's in a very good place. The sort of respiratory equipment is sort of market leading.
they said that the helmets was a thing. Helmets and rebreathers.
Yeah, was it helmets or
Following
body
recently announced
armor?
contract from German Navy, partially offset by a modest decline in respiratory orders. The order book was 21% higher than prior last year. Cash conversion very strong, reflecting. I mean, look at those because that's in a very strong area there. I mean, you find most of the obvious military plays like BA systems, all that, they're gone. They've been going up for a long time. But this almost like
Yeah,
is a bit more subtle read across, isn't it? So
yeah,
it's like
yeah. It wasn't helmets; it was body armor. I made
our body. That's right. Yeah,
making
yeah,
mistakes left, right, and centre today. Yeah, it's a good play on the defence market if you want a bit of defence at a reasonable price.
So
You
what's
know,
what are the what's the figures there? Not have you got any access
oh, I
to
haven't
figures?
looked at it. I'll have a
Let's have a
quick
look.
look.
Let's scroll down. God, oh yeah, it's preliminary results. So okay, it's orders received, stat results. What's his net debt? Oh, the net debt of 85 million.
Yeah.
Do you know what though? Company, I keep saying this. Companies now with a manageable, in fact, like a saga, but companies now with a manageable debt. That's okay, it's a bit more than average, but a cash generative. I think could get re-rated it soon. If they're good business, because that cost of debt will be coming down
Mm.
and going forward. Closing revenue. Okay, there we go. Revenue's down 7.5% for the year. Not a huge amount. Then maybe they're improving the order book. There has gone. Has anything gone up? The closing order book's gone up. So that's a good sign of forward, I suppose, revenue. Yeah. Okay,
That's what you want to see. You know that the future orders are starting to come through. But it's I mean it's a big old recovery play. This one.
yeah. So look
But
at
it was
that.
once a great company.
Yeah.
Sort of bridge too far type stuff with this body armor acquisition, which went very wrong. It's just a long, hard slog back. But these things do come back at some point, or often do, sometimes do. And it will be a sort of management story. And again, it's looking behind the company and seeing basically what management are doing to get this company back on track and to where it was before, which was a great favourite of private investors.
Yeah. 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 Well, I do like that. It was rallying a little bit. Dove today, maybe it's coming back a bit, but it's rallied hard from the low. £6 up to 9.66. Those rallies from the lows can be really aggressive. That's 50% rally. It's like that was a bargain to have there, wasn't it? Wow.
Yeah,
Where's the
yeah.
50-day moving average there? Look at that. 50 days is there. That's a 666. Oof. In fact,
Yeah.
that's a golden cross there. Look at that golden cross happening there.
We've got
Look at
that
that
big loss
reversal.
this year, but then if you look to next year,
Yeah. What's the
pre-tax profits
forecast?
going to 20 pretty much 20 million the
Okay.
pre-tax level.
Yeah.
And its growth thereafter.
Yeah. Okay. Okay. Let's scroll down. Some of the most read supply capital. That's the point. The Chill Brands equity fundraising it's not a bad discount. It's dropped. In fact, let's sort of chill again. I just think in my mind that the play in this market is Supreme. I think it is a Supreme operator because they are generating cash, but they're in the same kind of. So it's been coming down.
Diversification is key to
Yeah.
Supreme. Yeah,
But out of the
obviously,
two,
Babes is a great business, but it was good to see them expanding
yeah.
their nutrition business the other day.
Global Petroleum. This is a partnership agreement, Synergy East Med, and the terms look to explore energy opportunities in East Mediterranean. Well, that's a nice gig if you can get it. What is the market cap here? 1.66. No wonder it's rising by 17%. Anything will move the dial on that.
Too small for my liking.
Yeah. Corporate update on Predator on gas. What's this? Independent technical report and recover gas of 109 and 200 BCF unrisked there. So fully funded for 2024 commitments. Let's have the chart. This was that ridiculous stock that went crazy and came back down on that pretend takeover. I remember that. How does that happen? It's nuts. What else you got here? Palladium, nothing there. Phoenix Copper offer AFC. We're going to on the beach in a bit, which is like secured funding. This is from the Department of Transport and Innovate. They're looking at is a combustion engine. It's to decarbonize the shipping sort of sector. Help with that. And a consortium have awarded 670 grand design integrated proprietary ammonia cracker reactor technology with marine purposed ammonia fueled internal combustion engines. So it's helping that there. I mean, it's not a lot of money to develop that, but hence why it's. Do you know what's done very well of late? Is what's the other one? Ceres, yeah, that's the one that's really risen. They got 40 million from of these plays. Ceres Power. Oh no, in fact, it jumped up and come back down. So it's not huge there.
They've all got a lot of cash, haven't they? They've sitting on tons of cash.
Yeah.
I'm awaiting, where that part when I see that path to profits.
Yeah, well, it's going to be a long time. I don't know if the cash will make it there either. Following is this. I can't see it's been sustainable. Holidays are too expensive. They really are. They're ridiculous. I don't see who's buying holidays at these prices.
The same people that were buying used cars at the prices they were,
Yeah.
a year, 2 years ago. The thing is, you buy if you need something or if you want something, and arguably holidays fall into the both want and need category. Sort of need to go away. You'll pay whatever it takes, but it will reset. Those prices will come back down as we've seen in the used car market.
Yeah.
And so make hay
Yes,
make hay
that's
while the
right.
sun shines. But as long as there's a solid business behind it, and actually, presumably the cost of delivering holidays has also got a bit more expensive. So it's all about the margin rather than the top line.
But now they're saying that because they said that literally a record following its best ever summer, the group began full year 2024 with a record forward order book and significant momentum. This has continued into the peak booking period, 27% ahead of the equivalent year last year. Now they're saying here the group has taken the opportunity, which may hit their margin, to price competitively and focus on volume growth to capture a share in the growing market, and remains confident delivering full year profit in line with current market. Yes, you can remain confident as you want, but if you start getting that competitive market, your margin is going to thin, aren't they?
But they're managing the margin. If they can price competitively, manage their margin, and deliver on expectations, that is the trick.
That's the holy grail, though, isn't it?
That's
market share, price competitive, and manage your margins.
Seems like what they're doing. So they're on course for 32 million of pre-tax this year.
And what's the market cap there?
Market cap is 275 million, near enough. But you're talking a PE of just over 11. So not an expensive share, and not indebted. Really, sort of rapid growth forecast for several years to come.
That's I don't know what happened here. I was confused by what they did. I literally took a stake in them about here, and I got out, and they went down. It rallied again. But I mean, look at that. I don't think this is going to look at that. The market today is not liking that competitive pricing. That's going to come back down. That is. The opportunities in that. I believe what you said with the car sales there. Yes, you're right. Sometimes it's like stock prices. Sometimes you see a stock price going up, you never think it'll come back. It does, and the harder and faster it goes up, sometimes the more spectacularly it can come back down. And in fact, car prices are similar. When I remember my father saying they'd sold a car to a customer, he'd come back 2 years later and got his money back for it, pretty much, on a trade price. So they sort of retail come out. That's how car prices were. They were mad, and people couldn't get stock. Now that's like the holiday market. It won't be like that, though. I mean, it'll be just. I think it'll have to come back down. I think prices have to go down.
Well, yeah. I mean, there's a lot of pent up demand at the moment, and I think that seems a sensible approach. Take share. Take share, deliver nice holidays. The fact is they can reduce their they sort of turn the dial on marketing spend. As well, so turn that down to manage profitability.
Do you remember we covered John, Helium One a couple of times? They had technical problems after technical problems, and literally cratered. Now anyone brave enough, this is a Helium Explorer, to jump in and nibble a bit at the bottom if you're close to the bottom. You've been rewarded. You'd have been rewarded. It's like 50% yesterday and 60% today, and in fact, it hardly features on the chart. But if anyone bought anything down here, I don't know why, you'd be brave or crazy. But that was like, look at it, 1.7. Look at that. That is a phenomenal rise. It doesn't seem it because it's just dropped off a cliff in the last thing. But in the last couple of days, look at that. It's gone from it's a 207% it's done in the last 2 days. Sometimes they can pay off. Other times they don't, but I mean that's a very risky play. But it's literally they've had a bit of success yesterday. So they've managed to get the drill to total depth finally, or they've managed to get a drill working. So that's a good start. CTA Automotive, good news from them, up 23% actually. And
I don't know much about the company. Stock. I must admit, I don't know much about the car interiors as far as I understand it. So again, it's an industry. One of the reasons you had this massive spike in used car prices was because new car supply chains, started to become very problematic, particularly around the sort of flow of microchips. And most new cars, most modern cars, have a lot of silicon in them.
Yeah.
So you had a real hiatus in new car production. Hence the demand shifting into used cars and prices going through the roof. So that's coming. That balance is going to shift now. And that's good news for people throughout the supply chain, like CT Automotive.
Yeah, well, I mean, and I've looked at their balance sheet, and they are reducing. Like I said, they did have debt, but they bring it down very quickly, ahead of expectations, which is good. I mean, and that's the kind of company I think would
Mm.
benefit anyway from having a little bit of debt, but it's not. But their revenue,
Well, it's a tiny
140,
amount of debt in comparison to
yeah,
its revenues, you know.
yeah, 140 million of revenue here, and I mean, obviously the margins because they manufacture be quite slim, I assume.
Mm.
But nevertheless, they do say, as a result, the group expects report underlying profit before tax of $8 million. So that's decent. That put that on what even if maybe 7, 8, not whatever. If you round figure 80 million is too much. But I mean, I'm assuming that's going to get better. But they say net debt at the position expected to be 6 million, reduced from 9 million. So that's what's a 30% reduction.
Yeah.
And they said they're healthy order book going forward. Production tooling revenue. The board is closely monitoring the situation in the Red Sea, and to date, not experienced any material impact. They think it's overblown a bit.
Yeah. Well, again, when I heard that from Jamie the other day, it's certainly what we discussed. It's 10 days extra to go around the Cape rather than through the Suez Canal. So there is an impact on supply chains, but it's a 10-day impact, so much more manageable than some of the supply chain issues we've had in recent history over the last couple of years or so.
Yeah, look at that. That's an excellent chart. There's very little volume. You can see there. It's a very bitty chart. But you can see there, broke the 50-day moving average there. And then you wanted to break highs again. It broke up 200-day moving average, golden cross. Now you've got this, it's failed to close above that 70 pence. Now it's 75. You can hold that. That's quite good. So that's looking good, that chart.
Massive margin recovery here. So you mentioned it's low margin. It's sort of high single digits and improving. Forecast to improve over this year, this current financial year and the next. And the shares, they're on sort of six times forecast earnings.
That's really,
I must admit this company wasn't really on my radar, but I think it's one I'm going to have a peek at.
Yeah, well, do you know what? Oddly, when you get companies like that just improving, everything improving from literally, debt coming down, top line doing well, profit before tax, and even if especially if you come from a loss-making position and into a profitable position, that's a re-rate, there because in fact that I just got an alert on Hargreaves Lansdown, everyone, recent high. It's not a huge high, but if you can see the bowing round him, let's get rid of a 50-day moving average there. You can see there. It's trying to get above that level here. What are your thoughts on that Hargreaves Lansdown now, John? Are you thinking, because I've seen a lot of competitors come in the market and people say that, and they criticize that. It's funny, isn't it? The Markets Authority came out and criticized high fees for everyone. And then AJ Bell came out and said, we're repricing all our stuff. This was in the pipeline. Hargreaves Lansdown kept quiet. We're not. We're not. We give it loads of money from them.
It's the market leader. Again, there is competition, but it is the market leader. I don't think it's going anywhere. But yeah, I mean, when that recovery starts to happen, I don't know. That's a small up, steady uptrend for over the last couple of months.
Months. If they literally rise on results, that'll be a good thing, I think. But if it can, it's a really messy chart. It's like it keeps spiking up, and I don't know if there's on results or what. It keeps spiking up.
Dead cat bounce.
Yeah, when it needs to spike up. Yeah, what you want is a spike up, right? And then literally goes sideways or something. You don't want it to fall back down. So give it a couple of days. You won't miss it. Give it a couple of days, because you may have a big seller in there. A dark trace. I'm looking at a dark trace. It's 50-day moving average there. I don't know what. It's crossing that anyway. Okay. Yeah. So anyway, CTA is ticking there for CTA motive. 50 million market cap looks like improving. In fact, I took my cars. Do you know what? AI is worrying me. It's like sometimes that AI thing joins our morning meetings, invites itself. In fact, it starts the meeting up. The AI note taker. They're inserting themselves into our lives. It's like viruses.
You can turn it off.
Oh, okay.
You can flush it out of your system.
It's always listening though. There's took my cars. We get car adverts now. I normally have ladies in dresses.
Well, no, we're looking at car also component manufacturer.
Motorpoint.
We talked about Motorpoint, but you've looked at things.
But I didn't look at anything cars related. We talked about Motorpoint, the car prices, and then coming down and car adverts coming out.
I think you're getting overly worried about.
No. That's
pernicious influence of AI.
Don't underestimate AI. That's the first time I've ever seen a car advert on Vox. We talk about cars. Anyway,
you've watched too much Terminator.
You can't watch enough of that. Watch it all the time in your combat gear. I tell you what I saw actually, which is a bit of a was a bit of darling or did well, was Learning Technologies, bigger company, up at 70. Hang on, it's not even the risers list, is it? What's the biggest, smallest riser? No, there, some big risers today. Eco Energy, 90%. Oh, so 60 is 600 million. But LTG, which is like a mid cap pretty much. And do you know much about these, John?
No, not especially, no.
They do like you know, global leader, market leader in digital learning and talent management, these software as a service, all that stuff. But they said not less than 560 million top line in line with market. They've got a bit of debt as well, though. That debt's coming down again. The board expects EBIT from continuing operations not less than 98 million, in line with consensus expectations. Just EBITDA. But again, if you look at, can you get the forecast up on these? Because I think I looked on Trading View, I think, and LTG.
Steady riser. Steady
Yeah.
riser. Yeah.
Where is it?
Yeah, the forecast will come back a bit actually on this one.
Well, they've got a mixture here, forecast through, on 126, 185.
But the
So
consensus has come back, which says to me that there's been some downgrades here.
yeah. But the average is 60% up, 130. So
yeah. Well, it's price target, but when you look at the chart, when it's come off heavily, so yeah, that sort of tells you what's been happening on the earnings.
But look at that going
But
up.
there's been some fair downgrades here.
Yeah, that's well, they do a lot of acquisitions apparently. One acquisition, I watched a video with one of the fund managers on Vox, and that's a good thing. If you go on Vox and you click on the pages here, on the side here, any interviews you can see. In fact, Dr. Paul Jordan, and Marty, he was saying that they come unstuck because they did this acquisition apparently, and it had problems getting clearance in America, which is one of their biggest markets for security clearance for some reason, because of technology and all that. And so that dragged the forecast down. But they've sort of got around that and all that stuff now. But they are acquisitive. But like I said, the performance on this, like I said, going back, been amazing. So from 14 pence, it's done to 240. What's that? That's nearly a 10 bagger, 20 bagger nearly. It's 15 bagger. And it's come back a bit. And so it's worth looking at companies like this if they're good businesses.
Well, it takes us back to that, will winners keep on winning, will performers keep on performing question. And, the answer here has been no. Then the next question would be why? And is this like the things we saw with For Imprint and Cranswick where events have caught up with it, but they haven't actually changed the fundamental strength of the company and its strategy and its management and what they're hoping to deliver. Is that the same for this? And that's why you can't tell that from just looking at numbers. You've got to really dig into the company and it's understand its strategy qualitatively. And something like LCGW, you could argue, just looking at it, just a very quick read. It's in basically recruitment and talent management for large companies.
Okay.
And we know that it's been a bit of a kind of crappy market in sort of recruitment. We saw Mind Gym was another company that's listed in the UK that does, sort of potentially discretionary spend for corporates, and in that case, it was around, it was sort of, staff education, staff, sort of psychological management, so has it been caught up in what's a sell-off in a tough sector, or is there something wrong? You have to be doubly careful with companies that are very acquisitive, because acquisitions can help companies hide all manner of ills in their accounts. Not saying that that's what's happening here, but it is.
You are.
Well, I'm not saying that's what's happening.
I'm only joking, Johnny boy.
I haven't looked at it, but it's something to be wary of.
I'm joking. Sorry, I've missed comments. There's quite a few coming. I didn't see them. Sorry. Let's catch them. Matthew says 100% winners keep on winning. Constellation Software, perfect example. 34% compound annual growth. I'm not aware of those. El said Time Finance so undervalued. I could see enterprise value around 116. I think the brokers has upgraded to 71 pence. I think from where are we at the moment? Yeah, 71 pence broker has got it. Another company on the radar, great results, is Titon. Titon, John, you know about those?
Showers.
Informa, one more thing. Informa, I'm sure you now just post things to wind me up. Why doesn't the UK have any scalable listed companies? Only Games Workshop is an example. Even ARM now listed in the US. There's countless examples in the US. Why can't, say, Fever Tree be Celsius or more? I know, but listen, you are aware we're in a bear
Outside.
market, yeah, at the bottom of a bear market, and the last 2 years have been very hard. So many stocks are taking a hammering, absolute hammering. So sentiment is very low. Now, if we're still doing this show in a year's time, I'm sure your sentiment will be different because a lot of companies will be rallying by then. Daffer says,
We do have
go on.
scalable companies.
Yeah, we do.
Of
Yeah.
course we do. You look at something like Ashted, in the FTSE 100, for example.
For Imprint, for example, in fact, the winners we looked at for Imprint, all those are Cranswick. This, when your share price is going, it's scaling because they're growing like heck. The share price is going up. So
they're just not. They're just not. They're not the same sort of. They're not sexy, are they? A lot of the time, they're like, they're not. They don't have that sort of US tech feel.
We're a scalable pork business. Yeah, it's not to get Silicon Valley excited, that one, is it? Let me just
Titan, by the way, is building materials, doors and windows, and ventilation. Very exciting.
You say we haven't got sexy stocks? Wow.
Yeah. But actually, no. I mean, again, one thing I was going to point out, just saw the back of some of the news today, which update from Wix, which is fairly good. We've had an update this week from Lords Group, which was pretty good. Brickability, another good update this week. Stelrad, Rads. Now there's an exciting business.
I know.
But yeah, this is a sector that's
radiated. Imagine if you become a significant holder of that business. You try to, boast about that party. Oh yeah, I hold 3% of a radiator business.
I'd like to own 3% of a radiator business.
Yeah.
I mean,
does that warm the cockles in the heart?
No. I mean, the point is that this is a sector that's been at a rotten time. There's a slowdown in the home construction market, but we're starting to see some good signs. And a slowdown in repair and maintenance, RMI, repair and maintenance as well. Okay. But we're starting to see some signs of life coming out.
Yeah. I quite like that chart, by the way. Titan, I quite like that. I mean, it's come down. Look at that. It's bowled up and over 100. It seems that that's a bottom there. It looks quite nice. That it looks bowing around. There's a couple more questions here. Forgive me for someone who complains I talk about stocks, but if someone asks me about stocks, I'm going to talk about it. Daffer says, any opinions on whether SBDS or Silver Bullet is good entry just for now? I'm always timing entry badly. I'm thinking of just watching for the time being, albeit I have some spare cash. If I were you, they do a trading update. Apparently did it last year. Right? I would wait. The more information you can get, it's rallied very strongly. Just wait and get more information. The more information you can get a company, the less likely you are to make a loss. So it's rallied strongly. So, I don't know what people are expecting, but it's. I think wait for results. You never
have a nibble.
Yeah. Well, you can have a little. That's another good bit of advice. I can't advise you to invest in anything, but if you want to avoid the fear of missing out, very small amount, tiny amount. I mean, you're talking about an amount that won't make a difference if it goes up and down, and that way, but
keeps you interested.
It keeps you interested and takes the edge off the fear of missing out. It does take it off. I don't know about you, John. Whenever I make a new investment and say an older investment is a lot bigger in my portfolio, my new investment is the one I'm always watching. It doesn't matter if I got a tiny amount in it. So it does help take the fear of missing out. But personally, I would wait for results.
I've had a little nibble this week.
Have you?
A little morsel of Poolbeg.
Oh, a bit more, yeah.
No, I didn't have any Poolbeg.
Oh, you didn't have any. So you have Vivo, you had, yeah.
Yeah, no, I've spoken to that company a lot, and I'm kind of fed up speaking to them, and hearing all this wonderful news and not having any. So I thought
keep it in the family.
I'd have a little nibble.
Yeah.
So, okay. So I just wanted to point out why building materials. Just sort of going back to that, jumping around. Brick makers are looking interesting.
Okay, so
Forterra, Ibstock,
Michelmersh,
yeah.
Yeah, you think they'll rally ahead?
I think there's a rally. There's a rally, a sustainable rally that appears to be setting in here.
Yeah.
What I would say is
Michelmersh, which is the other one you said?
Forterra. Now Forterra, we've got a new feature on the site. Well, it's newish. We've started to add a lot of broker research onto Vox. And one of our research partners, Progressive, published a piece on Forterra.
Okay.
Where was that? 25th, yesterday, in fact. So I would encourage everyone to head over onto the site and look up Forterra, and you'll find that. And by doing that, you'll find a lot of the other research that's coming up on the site.
Yeah, free broker research. And,
there you go.
It's
much better than that.
So,
yeah.
Look at that. I mean, that's a typical example. Like it hasn't, it had a fake rally here, but you can say it's come down. It's broke up this previous level of support now. it's almost in line with that to support resistance, but it's almost on that 200 moving average. So that's I'm not saying it's going to shoot off here, but
Yep.
it seems like the bottom is in, and we've seen this on a lot of stocks. The bottom is in. We're not rallying crazily. I mean, off the bottom you can do, but it's not. We're not in the bull market yet. But you need this bottoming formation before you can start rallying, and so that's happening with a lot of companies.
We've had a lot of pain.
Yeah,
We've had a lot of pain, but it's not as as we mentioned earlier. There might be some downgrades here, but those downgrades now do appear to be largely priced in.
Yeah, well, talk about pain. There's a couple of losers here. Active Energy. Oh, that's a nightmare there. It's gone down. It actually dropped 70% a day, right? And it's down. It's 800,000 market cap. I think it's almost a good night, is it? But they've been constructing this coal switch fuel cell plant for almost renewable stuff, and then the people constructing it said now they're not going to do it anymore. No, we can't be bothered. So basically, this is who is it? It's player. It's been done by Player Design. And they said, to date, these discussions have been proven to be unproductive, and PDI has now informed Active Energy that they're no longer willing to or able to commit to either a future production date for coal switch fuel or future production volumes for coal switch fuel. This recent development is hugely disappointing for Active Energy, who have several potential customers lined up to receive coal switch fuel at the earliest opportunity. So that is a bit of a nightmare. Also, warning a little bit is Coral. They just they manufacture sort of plastics. This is a plastic injection and another sexy company. But they did an acquisition spree recently. It looked like they're doing quite well there. They did say now anticipated revenue will be approximately 10% below, challenging environment, all this margins also negatively impacted by deleveraging effect. Anticipate the profitability in 2024 will be below both management and market expectations. There we go. So that's not good. When you get downgrades, you're looking for upgrades, everyone. That's what you're looking for. In trading statements, look for upgrades. Anything else? Oh, just quickly on, let me just scroll down here. A couple of business stories. I don't know if you saw this. Here we go. Lower inflation lifts UK consumer sentiment. We mentioned this. Consumer confidence rose to -19. Wow. That's buoyant. -19 from -22 in December. But it said inflation unexpectedly rose to 4% in December, but the peak was 11.1% in October. So maybe people sort of managing that. Maybe even people saying now they're looking at mortgage deals a while back, and now they're getting a bit better, maybe coming out. So maybe they're feeling a bit, who knows. Look at this. UK halts trade negotiations with Canada over hormones in beef. So it's beef and cheese. And so there's now no deal between Canada and UK. I'm gutted because I often order, Canadian beef and cheese. It's my favourite food.
But no, we want to sell them cheese, don't we?
I know. In fact, this is the tail of it. This will be Remainers will love this though. Total trade between the two countries worth 19.2 billion. So it's decent size that. According to the UK, imports from Canada were 7.3. Exports to Canada is worth 11.8, so that's now 11.8 billion not being supplied. So that's it's a little bit worrying. And
it will. It doesn't stop trade. Not agreeing.
No, but it's more expensive, isn't it? You buy your cheese, and people. And I just say, I don't know about you. Hasn't Britain, apart from mad cow disease, hasn't Britain got quite a good reputation for cheese and beef? I think so.
We have a good reputation generally for animal husbandry and food standards.
Yeah,
and that's one of the things. Funny enough, going back to Cranswick, that set it apart over the years. UK pork production is of a higher standard than many other.
Well, basically
standards of animal welfare. Mainly.
Yeah, so they look after the pigs nicely, stroke them, and then kill them in a nice, fast way.
You're gonna put it like that.
Well, that's what it is. I find it odd to get farm. I find it odd sometimes a farmer's upset the animals are being killed by the way they don't want.
It's the way they live, and the way they're transported.
But, I know that. But I mean, sometimes remember that back in the mad beef days, these farmers were upset and all that about the cows being killed. What? You're going to kill them anyway. So they're like pets to them. They're not. They're treating them like they're acting like they're.
I feel we're having a bit of a partridge moment here now. Let's move on.
Okay, and finally, it's catching up. Do you remember everyone said Tesla's untouchable? And in fact, it may be a good time to sort of start looking at nibbling the stock. Not yet; it's in a downtrend, but they do say yesterday 12% it dropped off, wiping 80 billion off the value. 80 billion, isn't that bigger than any company? UK. This is in the UK. That's the value wiped on Tesla yesterday.
Thereabouts.
But they said sales growth may be notably lower in 2024. They've been lowering their prices as well. So they get less sales, less margins, and the Chinese are coming, everyone. That's what's happening, isn't it? Let's have a look at Tesla share price. But
it's not just many automotive manufacturers are upping their electric car ranges, whether VW or the sort of Japanese and Korean car makers, and they're more affordable and more reliable and easier to service. And there's all sorts of things. I wouldn't buy Tesla. I just wouldn't. I mean, it's just not for me.
I can't see Tesla here. I can't see Tesla. It's there, I suppose. It dropped. So 12% yesterday. Yeah, 12.4%.
Yeah, I wouldn't buy a Tesla, and I wouldn't buy the shares. So biggest company in the UK incidentally is AstraZeneca. She's 162 billion.
So you know what? Tesla lost 80 billion. I know Tesla 80 billion yesterday. That's 3/4 the market cap of pretty much that. That's nuts, isn't it? How big that is. And you got to say
it is nuts. That's exactly why I wouldn't buy the shares.
Yeah, you got to say with the amount of competition coming online, and people, not everyone's been driving a Tesla. There are other cars out there you can buy. Sorry, let's just finish off in the comments. Thank you very much for commenting, everyone. There's a lot of comments here. Mike says W7L scaling currently in the US and international. IQGO scaling internationally. They are there, just smaller. YouGov too. There we are. Mike's giving Informa some examples. Informa, but I do like what you're doing. Informa. You can stimulate conversation within conversation.
Yeah.
Dagger. The mining companies are starting to move. This could be an early sign of recovery in the markets. China's also lowered the amount of which banks have. Not only China doing that, they think they're pumping money into the market.
Yeah, so big bazooka.
Nuts. Yeah.
But there was a school of thought it needs more. But miners it's been tough.
Okay, Graham says, Graham says Sarah's joint venture with Bosch and Weichai for marine power has been stopped in current format. It was Sarah's big hope. Okay. Not a company I follow, but on the face of it, seems like pretty disgraceful behavior by Haydale Graphene management today. What happened with those?
I don't know. I have no idea.
I'll go through the comments if you want to look at that. Thoughts on Avon today? Oh, James, this is James. We just covered Avon. They said we've been underperformed, so we're going to screw the shareholders by resulting in our options. So we won't do. Oh, okay, resetting our options. Okay. Rockwood Strategic bought a stake in Titon in 2022. They've probably been working on turning the business around. And Simon Thompson tipped Coral Products 2 or 3 weeks ago.
Oof.
It's not a good. Well, that's the trouble. If you're in a tipping game, you can expect some to fall out of bed.
They've given themselves new options, by the way. Haydale. New management incentive scheme.
But because the share price has gone down so far, they can't exercise the options they've got. Well, that's the whole point. It's the whole point of options. You're supposed to get above that share price with performance. When you just bring them down, my shirt's in there. You just bring them down, constantly bring them down. It defeats the objects of performance shares.
Right.
Anyway, have a nice weekend, John. What are you doing? Out about?
No, busy as always.
Yeah, we're doing what? A bit more information? Anything you can tell us?
It's a that.
Well, I like doing a bit of this and that. I like a bit of this and that too. I may do a bit of that as well this weekend. Thanks everyone for tuning in. By all means, hit that thumbs up and like, subscribe, download the Voxbox app, and we'll speak to you next week. Have a nice weekend, everyone. Bye 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 bye.